Good morning, good morning, good morning. I'm hoping you can hear me. I tried opening the spaces just then and it said that it already finished. So I'm not really sure what's going on there, but I'm assuming everyone can hear me because everyone seems to be joining rather quickly. Obviously, welcome to today's morning blast, myself and Mr. Michael Brown, where we aim to jumpstart your trading day with an explosive daily market preview. Couple of caveats today. Anything said on this show is guaranteed for about 5 seconds after we say it. After that, fuck knows. And also, I'll better get the legals out of the way. So, as usual, nothing discussed in this Spaces session constitute trading or investment advice or infers any kind of endorsement by PIQ or indeed the hosts, which, as you know by now, is Mr. Michael Brown and myself, Mr. Ryan Paisley. Mr. Michael Brown, why didn't the Elliott Wave people tell us that that was going to happen?
Indeed. Very good morning, Ryan. Good morning, everyone. I've given up on the Elliott Wave people. I'm using astrology for my market calls now. I think it's probably got a better track record.
How's Uranus?
Oh, God. Oh, no. Can I just apologise to people on Ryan's behalf, not only for that crude remark, but also for our delay in starting this morning. We had some technical problems.
Oh, yeah. Apologise for the delay.
Deary me. Right. Shall we crack on?
Yeah, I think we better.
Indeed, yes, let's. Good morning, everybody. It finally happened yesterday with the S&P having fallen down to a low of 4,800 and the 30-year Treasury yield rising to just north of 5%. The orange man in the Oval Office finally bottled it after 4 decades, I should say, of harping on about protectionism and talking about tariffs needing to be imposed on the US's allies. He ended up folding like a cheap suit less than a week after implementing all of the reciprocal levies. I'm going to get onto that in a second because I've got a rant to have about that one.
Oh, get comfy.
Where was I? Yes, he did fold on the idea of tariffs via a Truth Social post, which came yesterday evening around 6:30 London time. President Trump announced a 90-day tariff pause on non-retaliating countries, with tariffs on those countries to reset to the baseline 10% level over that period. And it was later clarified that this list of non-retaliating countries is basically everyone who was slapped with a reciprocal tariff apart from China, because China's tariff has been raised to a whopping 125% effective immediately, and that is after China retaliated by raising their own levy on US imports to 84% in retaliation to Trump's retaliation, which came earlier in the week. The nub of all of this effectively is that there is now basically a trade embargo between the US and China because the tariffs are at such a high level that it just means demand is going to absolutely fall off a cliff. Tariffs for pretty much everyone else are back down to 10%, which is still in itself a pretty chunky level, but there have been no changes to the tariffs on either Canada or Mexico. So that means that non-USMCA compliant goods are still being levied with a 25% tariff as a result of the issues with fentanyl, or ostensibly as a result of that.
I hope listeners are taking notes because there's going to be a quiz at the end.
Oh, bloody hell. I mean, I've got notes and I'm even struggling to work out exactly what's going on.
Whilst you've been talking on the tit for tat with China, sorry, I've had too much coffee this morning. I'm tripping balls. It's worth noting that literally 6 minutes before we came on air, the Chinese Commerce Ministry's been putting out some headlines, and the TLDR is that they're not backing down, and they're willing to go all the way. Basically, quote, China will follow it to the end. So this looks like it's not going to play pretty for the next week or so, potentially a lot longer.
No, anyway, I mean, it's funny you mention that because I was told that China are desperate for a deal and President Xi is standing by his phone ready to call Trump. But, clearly someone was bullshitting on that one. Anyway, in terms of the market reaction to all of that, it was pretty much as you would expect in the equity space. The S&P ending yesterday up by 9.5%, the Nasdaq 100 jumping about 12%. Both of those, I think, were the best days since October of 2008, which was, of course, the depths of the financial crisis. And, of course, both indices were down by about 2-ish% on an intraday basis, although had started to recover after a very suspiciously timed Truth Social post from President Trump, who said about 3 minutes after the cash open, "This is a great time to buy!" Exclamation point, exclamation point, exclamation point, and then pulled an almighty U-turn on his signature policy about 4 hours later. If anyone has Trump or Besant or Lutnick or any of their wives as a client, go and check their statements, because there's probably something going on there.
The annoying thing is, looking back, you're like, it was so fucking obvious.
But no one's going to believe him.
No, well, this is the thing though. But you're thinking, well, to be fair, even Ian came on and said bet more. So big ups to Ian. He called it with about 8 minutes in front. So, but looking back, you're like,
do you mean Ian the dog?
Yeah.
Oh.
Ian posted on the Twitter account saying bet more about 8 minutes before it happened. The biscuit fund is well toppy at the moment.
Absolutely. In terms of some of the other market moves, just to rattle those off very, very quickly, we did see treasuries trading in relatively mixed fashion, well off the highs, but the 10-year yield still ended the day about 11 basis points higher, and the 30-year yield is where it was on Tuesday morning before all of those issues that we saw during Asia trade yesterday. So I think that's a bit interesting that treasuries haven't really reacted too significantly to the tariff announcement. Big sell-off at the front end on a hawkish repricing of Fed policy expectations, but further out the curve, people really aren't especially bothered. In foreign exchange space, we predictably saw havens slump, with the yen and the Swissy down by about 1% apiece, while higher beta currencies advanced, with the Aussie up by 3.5% and the Kiwi up by 2.5%, while cable recovered back above the 128 mark. Crude also gained ground, rallying 5% at the settlement, settling at $62.35 a barrel. We were as low as $55 a barrel intraday. Clearly, market participants betting that Trump putting tariffs on ice for a bit is going to turn around the demand outlook, and gold rallying by around about 3% or so. The big takeaway, or the big implication of all of those moves, is that I'm pleased to announce to you all that due to the improvement in market conditions, the trading halt on my puns has now been lifted. So be on your guard. In terms of some broader thoughts on the whole tariff issue, there's probably four things that I would say, just to take a little bit of a step back, and in terms of initial reaction to what we saw yesterday. The first is that, frankly, policymaking is still completely and utterly incoherent. I don't think anyone can legitimately claim that this is the art of the deal when no one's actually struck a deal, and also when the people who are involved in it don't seem to know exactly what's going on. If anyone caught the interview with Scott Bessent, the Treasury Secretary, after Trump's Truth Social post yesterday, I mean, he looked like a rabbit in the headlights. He seemed to have no idea what was going on at all. And this is the bloke who is supposedly in the room when all of these talks are going on. And I think that the other thing that will still on this front be sort of in the back of market participants' minds is, not only has Trump changed his mind so many times recently, but there's nothing to stop him doing that again. And I think that is going to be a nagging concern in the back of everyone's minds for some time to come. It really just smacks, to be completely honest with you, of panic. He's looked at what's going on in the Treasury complex. He's had business leaders ringing him up. He even said last night, Jamie Dimon on Fox said something had to be done. So it seems like Jamie Dimon is now running the country. The second point that I would make is 90 days takes us to the 8th of July, which is annoyingly close to a very special day, the 11th, my birthday. But of course, it remains to be seen what deals can actually be done in that 90-day period. Trade deals, certainly proper trade deals, take years, if not decades, to negotiate. I was chatting to the guys over at Forex Live yesterday, who put some context out. USMCA, which was basically NAFTA, but with some words rearranged, that took 13 months to negotiate, and they didn't even change that much. So it's very, very debatable what can actually be agreed during this 90-day period.
I'm going to take the other side here. I'm going to completely disagree with you here, and that's quite rare recently.
Go on.
Yes, it takes a load of time. It takes loads of time when there's no fire under people's feet. We take the piss out of the EU taking forever to make a simple decision. Right? It's because no one can be bothered to. There's no impetus to make a quick decision. No one needs to make a quick decision. This is stuff that's kind of they can brew it for fucking 2, 3, 4 years. Trump's not like that. Trump's saying like we got 90 days. This gets shit done. I truly believe by doing it like this, you will see results quicker. They might be results that might not last. They might need to be tweaked again in a year's time or something. But I disagree that you need all that time to make these decisions. I
See,
think it's
I would
the
say what.
needless bureaucracy that create the need for that time. And Trump's very clearly against bureaucracy because it's his way or the highway.
True. Now, I'm not a constitutional lawyer, but if you want to do a proper trade deal, it's got to be approved by Parliament and it's got to be approved by Congress, which is in the United States, of course, which is not going to be particularly easy. I think there's a distinction that needs to be drawn between what I would imagine they end up doing, which is countries coming up with effectively a list of purchase commitments and a memorandum of understanding to negotiate further, not actually getting a deal done in 90 days.
Well, no. So again, I disagree because if they've got a time limit of say 2 years to come up with it, they will take 2 years. We saw how it focused what's happened over the last 2 weeks. We saw how it focused the mind. Out of nowhere, we had European leaders agreeing within the space of 48 hours. Now that's unheard of. You've got Maloney's flying over there. Within the space of 48 hours. Again, unheard of. We've got other countries saying, okay, do you know what? We're going to drop tariffs. So, we've had some senior EU policymakers saying actually probably 0 for 0 tariffs is probably the way forward. If they had a year to come up with this decision, they would have taken a year because it's already been implied. They're basically running on negative time. So that's why they're coming up. Now, I don't know why I'm moving my hands about. No one can fucking see that. But I'm doing air quotes and everything. But yeah, I get what you're saying. But my counterpoint really, if to kind of draw a line under it, is that if politicians have X amount of days or weeks or years to come up with a solution, they will take that plus 1 day. Whereas Trump is saying, look, here's what's happening. You need to act right now. And we're seeing it. We're seeing people, we're seeing trade blocks solidify. We're seeing, all countries come out the woodwork. Japan was on the phone within about 4 hours. I get what you're saying. And I agree under normal circumstances, you're absolutely right. But Trump has changed the game on this. Trump isn't waiting 4 years. He's not giving them times. Well, he's now given them 90 days. But he'd already seen that, people come back to him. And fair enough, they had been coming back to him with saying, okay, well, look, we'll drop this if you drop that and vice versa. We'll buy, how many nations have we seen say we'll buy LNG in the space of the last 72 hours? So look, I get what you're saying. And 9 times out of 10, I would agree with you. But I just think in this particular situation, Trump is basically forcing people to come together and come to solutions at light speed compared to what we see usual bureaucracy. But anyway, that's me.
Well, it takes two to make a market, and we've got to move on because otherwise we're going to debate that until the cows come home, aren't we? The other point I would just make on that 90 days, and I've still got 2 other bloody things to talk about here, is there's a lot of unknowns about, is it a fixed deadline or is it like the TikTok deal where it's a rolling 90 days that seems to be extended forever? We've seen that before. The other question is, what happens in the 90 days if, let's say, for argument's sake, Trump's negotiating with Vietnam and doesn't like something that the Vietnamese say? Does he just turn around and go, oh, well, your reciprocal tariffs back on again? I think that's something that we potentially need to consider. The other 2 points I was going to make just more broadly, firstly was the tariff on China, which is 125% plus another 20 odd. Basically, it's a trade embargo with China. That is going to be very interesting to see how that pans out. Also, this 10% baseline tariff on pretty much everything else is still a huge hit to the US economy. If you put those 2 things together and do the back of the envelope maths, the average effective tariff rate is now about 23%, whereas with the Liberation Day stuff as it was before Trump last night, that rate was about 25, 26%. So the actual tariff rate hasn't changed too much. Obviously, it's much more weighted to a country where demand is now going to fall off a cliff, but nonetheless, it is still going to introduce downside growth risks. It is still going to introduce an upwards inflationary impulse. And that is, of course, something that needs to be borne in mind. In terms of Other bits and bobs from yesterday, of course, as I said, we did hear from Trump. He was stressing that China wants to make a deal. Jamie Dimon apparently told him that he needed to do something, etc., etc., etc. The other point, just in terms of the United States yesterday, is we did have quite a solid 10-year auction. That stopped through the when issued by 3 basis points, which I think, and this was about half an hour before Trump's announcement, and that would have settled a few nerves around this potential buyer's strike that we were seeing in the Treasury complex, which of course is no longer particularly concerning for market participants. Other things I did just want to bring up very briefly. Last one on tariffs. Again, this was before Trump's pivot, but it does just stress the uncertainty around the environment in which companies in the United States are operating. Both Delta and Walmart yesterday refused to reaffirm their financial year revenue and operating income guidance, basically saying the environment is too uncertain for us to be able to comment. Also, we have Bloomberg sources reporting that Amazon have apparently cancelled some inventory orders from China as a result of the tariffs. It was unclear how widespread those cancellations have been, but if Amazon are doing it, you would imagine pretty much every other importer from China is doing a similar thing. And lastly, just away from the tariffs and here in Europe, we did have news out of Germany yesterday, which confirmed that Friedrich Merz, the CDU, CSU, and the SPD, they have struck a coalition agreement to form the next German government. The new German finance minister is going to be a chap called Lars Klingbeil. He is the co-leader of the SPD. The defense minister, I'm only going to go through the important positions. The defense minister is going to remain as Boris Pistorius, which provides a degree of continuity there, particularly on the issue of Ukraine. And perhaps of most importance to markets, they noted that they want to complete reform of the debt brake this year. And for the moment, that is all from me.
Wonderful. Thank you, Mr. Michael Brown. So just some choice headlines via the awesome overnight news roundup, courtesy of our friend Zach, that is live from the slopes at the moment. Yeah, he's still putting in a shift, bless him. So starting off with trade policy headlines, obviously we've covered a lot of that already. So yeah, as we already know, new US tariffs on China take effect. They're raising the rate to 125%. China's still at 84% on tariffs, but we've seen this morning, it doesn't look like they're backing down. President Trump made a statement posted after midnight Eastern time, quote, "What a day, but more great days are coming." I'm sure market participants are looking forward to that. Tariff factors, Treasury Secretary Bezant's influence has reportedly increased. Multiple countries have shown a willingness to negotiate. The stock market has been declining. Apparently, this was what was leading to it. But we did see Bezant come out and say that the stock market was not a factor in the backing down. I'll lead you to decide if that really is the case. Trump's private acknowledgement, President Trump has privately acknowledged that his trade policy could trigger a recession, but aim to avoid a depression. Sources familiar with senior Chinese officials say President Xi will continue to responding firmly to Trump's tariffs escalations. Top Chinese leaders are set to meet Thursday, that's today, to discuss new stimulus measures focusing on support for housing, consumer spending, and technology. We've heard in the last week or so that potential RRR cuts may be coming. In terms of additional stimulus, look for, again, one thing we've got with China previously is, I'm trying to be polite here, but all fart, no poo. They love talking a good stimulus game. Very little trickles through to the economy. Whether or not it will be the same this time, I'm not so sure. I think potentially they might have to put some money into the system. Chinese Commerce Ministry statements. China is willing to resolve differences through consultation and negotiation. That was before the headline we just read this morning as we were just coming on air. But China will fight to the end. The door to dialogue remains open, but talks must be on the basis of mutual respect and equality. Good luck with that one. Regarding US and EU negotiations, Irish Trade Minister Harris, the US appears open to comprehensive negotiations with the EU. EU's von der Leyen welcomed Trump's pause on reciprocal tariffs, noting efforts toward a 0-for-0 agreement, as we were saying just now. Spanish PM Sanchez said the US pause could open the door for negotiations. Again, everyone is happy about this 90-day pause, especially the EU. Other global reactions. Japan's economy minister, Akazawa, is scheduled to visit the US for talks with Treasury Secretary Bezant. Remember, Japan are first in line because they did pick up literally just the only reason for this is they picked up the phone call, the phone early and called Trump very, very early after the initial tariffs. Taiwan's president said Taiwan is willing to cut its average nominal rate of 6% to 0 on a reciprocal basis. That's according to Bloomberg. Australia declined Beijing's proposal to cooperate against US tariffs, opting to diversify its trade instead. New Zealand and Australia may work with other nations on a response promoting free trade. In terms of macroeconomic policy headlines, our favorite, Fed Kashkari, emphasized that the impact on inflation may be reduced if the current tariff pause persists, cautioned uncertainty could still lead to an economic downturn. On the US budget and executive orders, House GOP cancelled a budget vote amid calls for deeper spending cuts. That's according to Politico. President Trump signed executive orders to review Pentagon weapons acquisitions, reviving US shipbuilding, and to deregulate certain markets. On China's economic indicators, obviously these are all made up, so pinch of salt. Sources say China's consumer prices continued to fall in March. CPI was at minus 0.4% month on month. Goldman Sachs revised down China's growth forecast due to tariff effects. China's banks are increasing lending.
Oh, actually, I've got another bit of a rant to have here.
Go on, go for it.
So,
I love it.
People on the internet last night, and also some of my colleagues,
their internet,
yes, and some of my colleagues, which wound me up, were laughing their heads off at the poor Goldman analyst who, at about 6:15 last night, sent out a note to everyone saying, "We now forecast a US recession." And of course, about 15 minutes later, Trump pulled a U-turn. Now, I'm not being funny, but when you're making calls, you don't expect someone to completely tear up all of their policies by a tweet 15 minutes later. I think we can probably cut the sell side a bit of slack with this one.
Do you know what? I'll give you that one because I saw a note come out. It was actually published about half an hour after the turnaround, and you know for a fact that was wrote in the morning, and he just had to get it cleared.
Oh, and it's with compliance and all the rest of it.
Yeah, and he's sitting there going, "Just fucking release the thing, please, please." And then as soon as this happens with Trump, he's then probably trying to pull it back, and it's like, "Sorry, it's in the system." So, I know,
absolutely.
I'm with you on that one. I do feel for these people. Anyway, where was I? So yes, Chinese banks are increasing lending for share buybacks to bolster market confidence. Commentaries in Chinese media suggest that further interest rate and RRR cuts to support the economy. Again, we're seeing this kind of whisper is becoming quite loud at the moment. Other macro points: Deutsche Bank and UBS note tariffs on consumer goods may appear in US inflation data starting mid-year. No shit, Sherlock. Japan's annual wholesale inflation hit 4.2% in March. Taiwan Central Bank affirmed continued holdings in US treasuries. Obviously, this comes after everyone was trying to work out who was selling treasuries, and we started pointing the finger at potentially central banks. Finally, for me, my last section on equity and corporate headlines: Chinese sellers on Amazon, some plan to increase prices or exit the US market altogether due to new tariffs. Bank executive lobbying: banking executives approach Republican lawmakers expressing concerns that tariffs could harm the economy. US Steel Corp in Japan. Obviously, this is the ongoing saga that's, it feels like there's no end in sight on this one. President Trump said he does not want US Steel Corp to go to China, referring to Nippon Steel's $14 billion bid. He does realize that they're not actually...
They're Japanese, aren't they?
Oh, what did I say? China. Sorry.
Yeah.
Japan.
Oh, right. Sorry, I thought that was him getting it wrong, not you.
No, that's me.
Oh, right.
Even says Japan. But I do question if he realizes that Japan aren't buying the factory and shipping it to Japan. He does realize that they're still making steel in the US, and it's still going to be for US consumption.
Probably not.
I'm not sure what he's getting at there. Corporate adjustments: Dell narrowed or eliminated US discounts on computers. Constellation Brands forecast profits below estimates, citing tariff impacts. TSMC's quarterly revenue rose 42% ahead of new tariffs. Volkswagen warned that its first quarter earnings missed expectations amid tariff-related pressures. Obviously, all of this might be being undone as we talk. Orsted called for more European support to avoid a downward spiral as tariffs affect its US operations. Tesco's expects lower profit on competition intensifies. And finally, OpenAI filed court documents alleging Elon Musk has wagered a quote relentless campaign against the startup. Sounds like someone's just getting a bit upset, to be honest. But that's it from me. Back to you.
Very good. Thank you, Ryan. You did miss, actually, probably the most important headline from yesterday. Let me just read that out via Bloomberg, and I assure you I'm not making this up. President Trump on Wednesday signed an executive order aimed at relaxing rules that limit water flow for shower heads, targeting an issue he has long complained makes it harder for him to properly wash his hair.
Do you know what? It's times
Priorities,
like this
right?
Well, no, but do you know what? It's times like this when I've got a lot of respect for him, because if I was a dictator, this is the kind of stuff I would do. I'd make
I've
bubble
got no
baths
hair left.
mandatory. Well, this is it.
Just polish
Get the
at this
chamois
point.
out. Right, anyway, sorry.
Moving on. In terms of today, then, of course, it kind of goes without saying, really, that everyone's going to be paying attention to the latest trade and tariff developments, but of course we do have a few bits and bobs on the data docket worth paying attention to. At 1:30 this afternoon we have the March US CPI figures due. On a month-on-month basis, headline CPI seen rising by 0.1%, slowing from the 0.2% seen in February, though core inflation is set to quicken to 0.3% for a prior 0.2%. When you annualise the data, headline CPI seen falling to 2.5% for a prior 2.8%, while the annual core inflation rate that's seen falling to 3%, down from a prior 3.1%. Now, do bear in mind, of course, that this data is from before Liberation Day and also from before the unwind from Liberation Day that we saw yesterday. So it is a little bit stale at this point. But nevertheless, I do think there are potential risks around particularly a hotter than expected inflation number, as it would mean that inflation is effectively starting at a higher base before this big bout of upside price pressures that we expect to hit the economy.
I get what you're saying there, but we have no idea what how people are setting prices based on all this. I genuinely believe that this data, it does more harm than good. I think there's just so much going on.
Well, you still got to release it.
No, but I just think anyone trading off this economic data needs their heads seen.
Oh, you're an idiot.
Because I think regardless of where it comes in, we do not know what data we've got since then. Especially over last week, we've seen people front running, whacking up prices. Then they'll be cutting them. It's going to be all over the show. I genuinely think,
oh no, you're absolutely right.
Think anyone kind of making some brash calls based on this inflation data needs to be avoided and tarred and feathered.
Don't trade it. Not advice, but just don't do it. In any case, just on
trading advice is put the fucking mouse down and walk away from your desk.
Yeah, absolutely. In any case, on inflation, I've had my envelope out again to do some back of the envelope maths. And if you look at a tariff on Chinese imports of, say, 125% as it is now, that on its own would probably add 1.2, 1.3 percentage points to CPI. You then need to take off the drop in demand that you would see as a result of that, and then add on the impacts of all the other tariffs that have been put in place. But the net of all of that is you're probably still looking at CPI getting somewhere near 4-ish% at some point over Q2 and Q3, assuming that these tariffs do remain in place for the 90-day period. So, of course, we are expecting inflation to continue to rise no matter what today's figures do say. The market has gone back to pricing 3 Fed cuts this year. We were up at about 4.5 at one point during the slightly panic-stricken trade yesterday, but that has pared somewhat since. In terms of other bits and bobs to keep an eye on today, we do also have the weekly US jobless claims data. Initial claims expected pretty much unchanged at 223,000. Continuing claims seen falling to 1.886 million, down for a prior 1.903. Although, of course, do bear in mind that neither of those prints coincide with the survey week for the April non-farm payrolls print. Other things to keep an eye on, we have a 30-year bond auction out of the United States at 6 o'clock this evening, $22 billion worth being sold off. Quite a chunky slate of Fed speakers today as well. The Fed's Harker, Goolsbee, Schmid, Bowman and Logan all set to be speaking, as will the BOE's Breeden, and the RBA Governor Bullock will also be making remarks this morning. And last but by no means least, there are no real notable corporate earnings due today, although do bear in mind that tomorrow is the sort of unofficial start of Q1 earnings season, where we will hear from BlackRock, JP Morgan, Wells Fargo and Morgan Stanley, all reporting before the opening bell. And for the moment, that is all from me.
Fantastic. And just for anyone that really cares, we've just had the Italian industrial production year-on-year data come out, and it came out at negative 2.7 versus an expected negative 1.9, so worse than expected. But Michael Brown, thank you as always for being an absolute stunner. There's rumors that I might be about later on, so if you fancy a beer, let me know. And listeners, thank you as always for tuning in, especially our regular ones. We really appreciate you. If you are trading today, as always, keep it tight. Remember to factor in the fuckery, and we'll see you tomorrow. Goodbye.
Indeed. Bye for now.